Hello, every single one of you beautiful people. It is FOMC today. Finally, we are together. Finally, we are going to have FOMC. Finally, we have September FOMC. And I have been waiting. I have been waiting since July for this day. So, today, we are going to have so much fun. So, if you don't know me, my name is Eivindfx. I am a forex trader of only 8 years. I have been failing my through those 8 years, and I trade normally forex, and I trade also stock market on the indexes as well. So, also some commodities here and there. That is me. And I hope that you are here to give us some laughter, some smiles, some jokes, as we are going through the Federal Reserve statement in 14 minutes. We have them coming out, and then we shall, of course, be waiting for the almighty God, Mr. Jerome Powell. We shall listen to him for an hour or whatever, and then we will debunk it into bite-sized things, and then we shall see what he says. Well, we never know, right? Heartache, I'm so glad that you're here. Let's go! Wait, I need to do that. Okay, let's go. Wait. Okay, 3, 2, 1. Let's go! Boom! Booyah! So, as we now know, we have dollar bullishness. Is that going to continue today? I actually believe that it is actually going to continue, unless Mr. Powell says something that is going to surprise the market. And that is the surprise that is actually going to drive the market today. If everything is going to, as expected, nothing new, we are going to be okay. But if they start to mess up the future guidance, the dot plot of what they think is going to be interest rate for the next future, if they're going to mess up the tapering, if they're going to mess up what they think is going to be, or how they think about the current market economic in America, if they start deviating for the market has done, and they also look at the market, then we can get some movements. I hope we don't get too much movement. Well, it would be nice. But we'll leave for the volatility, alright? Booyah! What did you say, Jana? You nearly missed it? Nah, you can nearly miss this one. Where's your Lambos? No man says. It's in the garage. If you come here for the Lambos, well, I can rent one tomorrow if you want me. But yeah, here we are. No, the most common car here is probably Prado. So, hello, Sean. Hello, Michael. Hello, Heartache. Hello, Adu. Hello, Music Hedrick. Dove is going to speak again. Feels like another NFP. Well, it is. What about gold? Says Siva. Of course, we're going to talk about gold. Of course, we cannot talk about gold. So, dollar is rising, gold is actually stopped at the price level I wanted you guys to, maybe sell from. So, is this your opportunity of your lifetime? Is this your one you're gonna make your money? Well, this webinar, or this live, or whatever you call it, it's only for educational purposes, not financial advice. It's whatever I say. It's only my personal opinion, and it doesn't matter anyways what I say, because I don't know the future, and neither do you. So you should actually not lose money. You should just be, trading the setups that you have been trading on demo, as you have always done, and believe it, you will. Okay, wink. And then whatever I say is not financial advice. Okay, so we can take this as an educational part. The thing is, the point today is that the market can rise or fall 100 pips, depending, and then go back up again. So if your stop loss is too close, maybe it's time to get out. Maybe not. Maybe you will get in more profits than you would ever imagine. Maybe that's another thing. Prado V8. Yeah. Well, I gave my wife a ride in her V8. How long did that go? I don't know. A week? No. Some days ago. So it's not that. It's, you know, it's a V8. Actually, I think she actually was in one today. Hello, Alalai. Hello, JJ. Finally, WEY. Hello, sir. Hello, sir. Pound yen, gold diggers. Oil as well. Yes, we will do that. Nyaje, Niko po asana. Today we are many Eivindfx host FOMC often, please. Hello, boss. Any views on oil? Says Babu. Babu says oil. Oil is finally going higher, and I think it's going to go higher. And, well, I don't know if that was your buy opportunity. I said this is an area I would like to buy-ish, but we didn't get there. I'm sorry. This is like exams results. Yeah, it is. I know. And I am your, what do you call it? I am your examiner. JJ, have you done your homework now? Can you do 2 plus 2? Hello, Moses. Welcome. Bees Gura says hello. And yes, if anybody's wondering where I am on this cloud Earth. I am currently in Africa, the country called Kenya, and in the town called Nairobi, which is 5 million people. And don't worry, no, I'm not living in a mud hut. This is, you know, pretty well off area, so don't worry. I'm not gonna get robbed anytime soon. So that was just a joke. Anyways, Aussie dollar currently at resistance. I think it can go both ways, but if it goes higher, that would be great. If it goes lower, well, that is kind of what it already is setting up for. So currently, Aussie dollar, it is set up for the downside. If we have surprises, you might never know. This might come higher. Then I would actually think to sell. I'm not going to sell it, but I would see sell prices around 73.22. I was just about to zoom. I've been editing videos, and I was about to zoom into you guys. I'm sorry, but yeah. So 73.00 or 73.22 is still eligible sell prices to take it lower. All right, because I think it's gonna be, you know, a bit more bullishness. Nairobi money heist. Yeah. Only 13 likes? Come on, people. You can do better than this. You have not been smiling yet? We have 7 minutes left. Somebody, investor, can you keep me on the clock? No. Volatility is gonna be in 7 minutes. It's gonna be on the statement, and then the press conference is gonna be explaining what they said in the statement. Statement is in 6 minutes, which we will have up on the screen, and then I'm just trying to prepare you guys for setups, but I can't do that so fast. I'm sorry. So, Euro never came to my 1750 sell price-ish. So 1760 is another area, and then 1800 I think Mr. Investor is looking to sell. So either, I'm gonna make those better. Maybe this price here, or this price here. I'm not saying it's gonna react from those prices. I'm just saying maybe what if it does. And you have to make up your own decisions. Pound dollar is still down in the trenches. I would love to have sold it at 138, but here we are. But I think whatever is going to happen right now. Okay, let's go through some, something for you, okay? Very fast. I'm going to be so fast you didn't even notice that was the lightning. And then the other one, take away you, and then you. Okay, cool, you. So, and then I forgot to take away you. It's fast. Come on. Okay, so first of all, I think we're going to have very strong reaction in whatever the direction that is. If it is a very strong message, it's just going to continue. If the message is a bit wonky, funky, not so much, we're going to have a pullback. If the market decided, or if the market was unannounced, in terms of he didn't know, didn't read and just reacted, then we're gonna have a full recovery back down. So there's gonna be number one, that is gonna be straight up. The second one is gonna be up, then a pullback, then higher high. The third one is gonna be, we are gonna go up, and then we are gonna go full force down again when they have actually read. And then the fourth one, the fourth option that I have today is lower. So whatever I think is just my personal opinion, but I think most likely, like 75% apparently, I think this is gonna go higher. Hola Cypher. Hola Stuart. Streamed liked, yeah. That's how we do it, man. You're not bringing your homework. Well, DJ, you are really not gonna like this live then, because I'm gonna push you. I'm gonna not punish you. I'm gonna push you to to remember all the things that I've taught you over the years. Your predictions is more on the sell side. Dollar bullish, and then one on the bearish side. But we are still gonna look into what is gonna happen, what actually happens. So I'm just gonna bring out my phone, so I can also be involved in the action, just in case, I want to trade it too, but I'm live too, so I can't just, it's difficult to do two things at the same time. But yeah. And then when Powell is speaking, I'm going to be a bit more silent. There's going to be music in the background. I don't know if you guys hear any music at all right now. There was supposed to be something. But when Powell is speaking, I'm going to be, maybe trading something. Maybe. Do you have any open trades? Not as of this week. I didn't get anything. So, yeah, just waiting for the dot plot, basically. So, here we are. We are going to go to news events, maybe, most likely, I think it is. Well, maybe not that one. Monetary policy. There is going to be this one here. And there's going to be some project materials and FOMC meeting minutes. So if anyone can also help me read through whatever is coming out so we can collaboratively do it, because I also need to keep you guys entertained. So I'm just, I'm just seeing my... what do you call it? My limitations. 2 minutes left. I see that. I see the 2 minutes left now. Open charts. I will have open charts. But I also have, I need to... Okay, we need to have... Wait. Gold. We have gold open. And then we need to have... I just take that away. Gold open, and then on the other one we need to have euro open, and then I guess that's that. Okay, 2 different charts, I guess it goes. Settings, I don't have time for that. Lines, no, where is it? Color themes, blue, gray. Okay, whatever, that didn't work out. So, and then Mr. FOMC here on a different chart then. So, cool. I don't have enough screens. I need more screens. Can anyone give me some screens? Anyways, so here we are. We have how many o'clock? We have 30 minutes left. Anything else you want to see before you die? What is your last wishes? So my forecast is dollar bullishness. I think these ones are going to fall. I guess that's what it is, and then we shall see if that is true. That is kind of my thought process. But why? Because I think we're still going to taper. It's just going to be delayed a bit, but we have kind of priced that in already. So your gold predictions, I think gold is going to fall. I hope so, at least. If not, I'm going to die. But anyways, I don't trade this event because I want to trade afterwards. I want to trade the news, not the actual. I want to trade what happens afterwards, not the reaction, because I'm going to lose in the reaction right now. Here we are. There we are. Where are we? We're going to upload this one. We have some euro bearishness. We pull back. Okay. PDF. There we are. Just load that up. Press conference is coming soon. Nothing new here. Let me put up a news shenanigan thing as well. That's probably going to be great. I'm just loading it for the life of me, by the way. How's the yens? The yens are currently green. Not much happening here. Pound yen, what's going on here? Nothing much. Euro is currently just waiting, and I'm still in the green of what is actually happening. Come on, load. Where is it happening? Why is it so slow? What happened to my internet? Oh. Come on, bro. Pound yen is still bullish, by the way, as far as I can see. Gold is... Nothing is happening on gold. Nothing is happening on euro. Maybe a bit lower. But that was just the initial reaction. Here we have it. Here we have it, finally. Federal Reserve is committed to using full range of support the economy. Nothing new there. With the progress of vaccination, strong policy support, indication of economic activity and employment had continued to strengthen. That is, as far as I remember, the same thing as last time, so nothing new there. We're looking for what is new. The sector that is most adversely affected by the pandemic has improved in the recent months, but the rise in COVID-19 has slowed the recovery, still the same. Inflation is elevated, largely reflecting transitionary factors. Overall, financial conditions remain accommodative in the part of reflecting policy measures to support the economy and flow of credits to U.S. households and businesses. I think this part is new and on top of my head, but we will see soon. The path of the economy depends on the virus. Progress on vaccination is likely to continue. Okay. The risks to the economic outlook remains. So as far as I remember, as far as I look at this now, I feel dollar bearishness because I think this is a bit less bullish than I would expect Fed to be. And then there's just the normal things. We will appropriate to maintain the target range. Still appropriate to maintain the target until labor market conditions have reached level consistent with committee's assessment of maximum employment, which is still not yet, which we have already figured out. 2% inflation is on track to moderately exceeding 2% for some time. Last December, committee was doing some treasury bills. They're still going to do it until substantial further progress has been made towards its maximum employment and price stability goals. Since then, economy has made progress towards the goal. If progress continues broadly expected, the committee judges that a moderation in the pace of assets may soon be warranted. That is probably new information here. So they say soon. Soon is the new word. Will you ever share your P&L? Do you want to see my P&L? Don't worry. And let's fund that too. In assessing the appropriate stance of the policy, we will continue to monitor implications of incoming information. The committee will prepare to adjust the stance of monetary policy as appropriate if risk emerges could impede attainment of the committee's goal. That's what they're saying right now. They're saying we are preparing for tapering. That is preparing for tapering right there, right now. So yeah, I need to go back to charts. So we have dollar bearishness, as I thought, reading the beginning of it, and we don't have tapering at the moment. They didn't taper today, and I think that's why we have the relief rally on euro. But by the way, this one can still fall. By the way, the reaction in the market is actually very little as far as I expected it to be. But yeah, here we are. Just goes to show no one knows what happened. That is not the point. 43 v3r3. That is not my point. My point is, if you know what's going to happen, that's up to you. That's not what I'm trading. That's what I'm doing. I am doing what they are saying right now. That's going to happen for another 200 to 300 pips. I don't care about what's going to happen right now in the market. That I'm not trading literally right now. But when there's new news in the market, that's going to be priced in, and that's probably going to take some time before it's fully priced in. Remember the uptrend, the downtrend, the uptrend on Euro USD in November 4th or 5th until December. It just continued for a month after the election. So even though there was an election that day on 5th or 4th of November last year, the market still rallied. This market still went higher. So even though whatever happens right now, then I still have a lot of pips to do. So I'm not a news trader. I'm a trend trader. And if I get a trend now, I'm going to take it and I'm going to hold it for as long as I can hold onto it with all of my hands and all of my toes and all my fingers. Like I thought, the Fed stays dovish. They will kick the can further and further and further. Yeah, well, that is actually because of economic development or lack of them, more than anything else. Okay, so what is really happening here right now, which we have been forecasting, is that the America's unemployment rate and employment situation is not red hot, which was kind of in the projections back in July when it was super hot. Now it has cooled down a bit, and then also Fed has to cool down. They can't be super hot when the economy is not super hot, at least for the employment situation. But as far as I can read Euro USD right now, we didn't go far. And this is actually going into, what was it? It was actually going into like the option number, I think it was 3 or something that I said. We go dollar bullish, then back up 100%, and then we just stay there. Okay? Yeah. But my aim in the market for my trading account is not to be forecasting news. My aim is to forecast, or at least be in the positions I should be in when there's a trend, kind of a thing. And I need to start forecasting these trends. Did you buy gold, mister? Yeah, and that's a thing, Denise, which is actually very interesting. And thank you for bringing that up. As far as I've seen on TikTok, and there's a lot of business accounts on TikTok, by the way, they are crying out for workers, and there are stories about stores. I don't know if Chipotle, whatever they call it nowadays over there. They closed down some stores for the day because they don't have staff. Like, well, that's for many different reasons, I guess. Not only for lack of people, but there's probably also like bad management and lack of pay and all those, and bad pay and all those things, I guess. But there is a divergence there. The numbers are not absolutely fantastically great in employment, but I see more and more every day that businesses don't get what they need in terms of workers. So maybe it will pick up in the end. But also do remember, when you are close to the equilibrium that the Fed wants in when it comes to unemployment, generally speaking, in an economy, there's always going to be that small unemployment people, because not everyone, I'm sorry, is employable for different reasons. Whatever the reason is, I'm not going to go into that. So really, what is happening is, I don't understand it, by the way. I don't understand why the unemployment rate is not lower. Based upon the reports I get and I see from the ground, that people are screaming for workers. But there's always another side of it. Is America, do they have good enough working environment for people? Do people want to be working for bad bosses, lack of pay, working 7 days a week? Probably they want. They'd rather stay at home or go somewhere else. Also, what I've seen from a guy from LinkedIn, this is the biggest migration in American working environment, in terms of there's masses of people shifting jobs at the moment. They probably will be employed in the end, and they probably are going to a better paying job or a better boss in the end. But there is a large shift right now in America. Just looking up. And by the way, if you're working internationally or if you're American, there is money to be made servicing those people that can't get enough people wherever you are in the world. Just saying. Small businesses need help them too, in any form or shape they want to in the end. I keep a passive attitude too. Too much uncertainty. Music rhetoric, that's not my point. Be super clear about your strategy and which market you want to be in. Let's say I'm a buyer on Aussie dollar at the moment. If I'm a buyer on your Aussie dollar, this is not bullish. If I'm a buyer, I'm gonna need a higher high, higher low situation, and I can be a buyer. So if I'm a buyer on Aussie dollar, I can just be waiting. And I haven't got my sell set. I haven't got my buy set yet. And that might take me a day or two before I can actually get a new trend, right? But if I'm a seller, for example, I am shaking a bit. But as I said earlier, we got up to the sell prices, and this is, by the way, a resistance and a place to sell. So be super straightforward, clear about your strategy, about your entries, about which market you want to be in, at what point you want to be in it, at which day of the month, which month are you going to look for those trends you have been spotting that you want to see. And if you don't get it, it doesn't matter. That's what doesn't matter. UK data jobs tells us all. Most jobs created were high-paying jobs. Okay? Wait for 2:30 p.m. ET. The news will be more important. Yeah, so that's what we're basically waiting for right now is Mr. Powell, the godfather of central banks at the moment. 0-hour contracts are currently being abused by employers. 43V3R3. There is plenty of stories out there of how employers are treating employees. So in the Netherlands, same situation. Businesses are screaming for workers. Yeah, that's one side of it. But also, are businesses are they able to pick up whatever their demand is? Is it workers? Is it technology? Is it their actual capacity? And if you're wondering, like, why now? Generally speaking, as an education class here, generally speaking, when we are trying to create inflation, things is going to get expensiver. Oil is going to be expensive. More fuel is going to be expensive. Palladium, steel, construction, timber, gold, probably, I guess, in the end. Yeah, in the end, I guess. Things that you buy, that is commodities that you can hold, will increase in price because that's what the whole world at the moment is trying to create. Inflation. What is inflation? Higher prices. And I can see in Kenya they are demonstrating about higher fuel prices, but also there's some taxes on top of that. I understand that. But it's just, why is nobody looking at the oil price? It's $70, $71 or whatever it was earlier today. 72 now. Of course it's going to go higher. Do you think it's going to go to 100? Probably. Why? Because every central bank that I know of is trying to create inflation. How do you create inflation? You create price pressure. You give people money so they can buy. A lot of people have money. That creates a lot of demand. Businesses can't keep up. They increase their prices. And there we are. Higher in prices. Gold is actually rising at the moment. Okay. I didn't expect that one. But here we are. And I said I would be a buyer if it reaches above 1800. So not yet. Generally, I would say that it's about poor working conditions and no benefits, particularly health insurance. Okay, so Chris, what you're talking about here is benefits. That is one side. The other one is terrible bosses and working 7 days a week, and you're trying to cover shifts, and you get zero benefits for that. The other one is maybe your working environment. Maybe you have like colleagues that is not nice to you whatsoever. That's another one that is going to, kick you out of the job. So there's working environment, there is your management, there is benefits, and the last one is that you get a better pay somewhere else. The grass is greener sometimes at the other side. So I think that was like the 4 major reasons that a LinkedIn guy, head of HR, said was the 4 major reasons of why people were changing their jobs in America at the moment. Gold should go higher. Yes, I believe so. I just need to, you know, wait for it actually to go higher. I can't just expect it to go higher anymore. I need it to go higher. Somebody need to keep me on time. So, I don't know. Investor was supposed to keep me on time, but I don't know. Somebody need to just... I can't see the time sometimes. So if we go over time, that's on you. So if Fed is all of a sudden talking, don't look at me. Last time gas prices got too high, stock market crashed. Yeah, the thing is about NASDAQ, natural gas at the moment, it was skyrocketing, by the way. But now it kind of topped out at $5, whatever it is. That's a CFD, by the way, on Henry Hub. But yeah, so it's pretty parabolic, at least here. Now it has some kind of pullback, okay. But you know, for us, it's just fun to trade it. You know, it's a commodity to trade, but for you guys, it's actually life. Any tips on which broker to use? Wanda, FX Pro, Vantage, and I have a whole ton of beef and bad stories about a lot of brokers. But I don't have any affiliation of any of those ones. There's no links for me on those ones. Just go and sign up. Unless you want to support me every time you trade, I guess I can go and find the link for you, so you can sign up through me. But I'm not here to benefit from that. That's not why I'm here. I'm here to find someone who struggles to trade, struggles to find clarity, struggles to see what is going on. And to the other ones, I'm here to educate you on financials, on economics, on macro, on what is going to happen next, generally speaking, as a general trend. And then we'll see if we'll end up in the UK, trading 212 is the best. There is different scenario. There's different opinions there. A bit hawkish due to coming soon term. A bit hawkish, though, due to the coming soon term. Okay, maybe. Last time the gas prices was too high, the stock market crashed. Yeah, true. So, yeah, that was not necessarily just a coincidence, I guess, but that was 2014. And then other time was 2019. If you remember 2018, 2019, is that when they increased their interest rates in America? But there were some constraints in this area that was kind of only for that time. I can't remember why they couldn't deliver gas, but there was some kind of bottleneck somewhere that made them not being able. That's why it's kind of skyrocketed, and then it fell back down again. So, and then we topped out around, bottom at around 140, 104. And then we are now at 4.8. But yeah, so who knows? Dunkirky, woohoo! Pound yen, we can do pound yen. Dunkirky, I want to see Dunkirky. What did you say? So dollar is bearish because the interest rate remained the same. Not at all. The dollar is falling because they are not tapering today. They are extending it out. And therefore, there's dollar bearishness because we have been pricing in that we're going to be... we're going to taper today. That is not going to happen anymore. So there is bearishness because there has been bullishness when they are thinking of tapering. Now there's bearishness because that is no longer true. That is kind of... And then they're also acknowledging that the economy is not... The working environment, the employment situation in America is not as red hot as they were expecting probably in June or July. So they're reducing it, and they are saying, well, we're not going to do anything until we see developments in the employment market, basically. 2008 gas was sky high. Well, yeah, that was gold is blowing my account. I am absolutely sorry, Ian. I wouldn't be trading gold if your account is that small. Tolga, just subscribe. Thank you very much, bro. And for those who are here, I just want to point out 10 minutes before we're gonna go more in there now. Just want to make sure that we all are on the same page. I just want to say thank you to all 4,475 subscribers to my channel. I thank you deeply, appreciate every single one of you. Does the dollar news really inversely impact Australian dollar? Yes, it does. Just asking because I checked all AXY and I'm seeing green candles growing. Adrian, yes. That is a risk on, risk off move. And when Australian goes higher, not always, but also dollar goes down. That is kind of the general theme. And when dollar, and then when Aussie goes down, dollar goes up. So there's an invert scenario, invert relationship there, because they have two way different jobs in the market. The Australia is commodity currency, and goes higher when there's a lot of excitement and happiness, and we're gonna have a lot of profits, and like where it will grow 10% and then will fall 10% when we are despair, it is crashing. What is going on? Where's the market? Where's the money gonna go then? If we are in despair, if you're losing money, it would all go to dollar, yen, and gold, and Swissy. So what is? Yeah, so it's a risk on, risk off, and there is plenty of videos out there explaining a risk on, risk off. If that explanation I just made did not make sense, commodity currencies are Aussie, New Zealand, Canadian, okay, Euro, pound, maybe sometimes. Aussie, no, is it dollar, yen, Swissy, gold is safe havens, or what you would want to have and hold when it is when it's a crisis. So you would go through the charts and compare notes of January to March 15th, give or take, 2020. That is risk off. Risk on is from around 20th of March, I think it is, until the end of the year. So you have to see from those dates, beginning of the 2020 to March 2020, mid-March 2020, and then from that was risk off. What's happening in the market, generally speaking, on all the currency pairs, all the commodities, equities, bond market, whatever. And then the opposite side, and then risk on from like mid-March, give or take-ish. Try some dollar analysis, please. Well, okay. Well, there is 2 other FOMC meetings before the end of the year, so maybe they will announce tapering then. Yeah. This is just September. This is just today. That is what we're trading today. So really, what we are hoping for is a clear direction. When are we going to taper? If we're going to taper. And they say we're going to taper when the market says, when the economic data point says we should. So what do you think is going to be most important now for the future? Do you think NFP in the beginning of October is going to be important for you? Absolutely. 8th of October is going to be a point where there's probably going to be more volatility than normal if the NFP is high. Maybe a million, maybe 700,000, 800,000, give or take, something up there. That's going to create dollar bullishness. I'm already saying this right now, 2 weeks before it happens. If it comes at 200,000, 300,000 new jobs, dollar will fall. So that's kind of that. Turkish lira, US dollar. I'm not trading that because there's no liquidity, because that's a one-sided thing, because Turkish lira is absolutely crushing it in a negative way, by the way, because they don't have so this is just gonna rise. Dollar is just gonna rise. Turkish lira is just gonna lose value. Nobody wants to buy it. So yeah, cool. There we go. Why? Well, Erdogan is probably one. Central banking boss was his nephew, and then they kicked him out, I guess. But currently, I think they were giving 16% interest rate, so they were giving something, but it's risky if it defaults. So I wouldn't. How are you, Alex Dunkirky? Donois. Keep in mind that gold will sell off a little off the end of the week. Next week, end of month, gold always go down a bit. Yeah. Great explanation. Thank you, bro. I will check those. Very much welcome, Adrianum. Joe! Check financial Jew squawk. Okay, we'll do that. Okay. Nobody told me about that. I forgot, actually, by the way. But thank you, Joe. You're so kind. How are you, Joe? Are you well? Are you... Wait, what? Like, what the what? Did this? No. Yeah, okay. I thought they increased interest rates now, bro. Wow. Whoa. Okay. Mm-hmm. Because I saw that one up there, I'm like 25. I thought it was supposed to be 0 because it's okay. Whew. Oi, 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 oi. That was almost a heart attack. Here we can look at myself. And then we need to look at Jerome Powell live, maybe? I don't know. Maybe I'll just find myself. Fed. Nobody? There we are. Okay. So just jump on there then. Put it in the background. Alright. Hello, James. Okay. Yeah. I will jump through it at the moment. Need to know Fed's policy. See the first rate hike in 2022. That's earlier than I thought. I think it was 2023. Well, I guess that's all that I remember to be though. But okay. Fed forecast shows official eventually split on 2022 interest rates. Yeah, that's what I read too, that if it continues, it will moderate its asset purchase soon. But not yet. The pandemic, because somebody was actually pricing it, that's going to be happening now. We'll keep the current Fed rate until labor market has reached maximum employment. Okay. So, still takes some time for that to happen. And then they also said that inflation rate was higher than sorry, quarter of interest rate though. Sorry, Alex. Sir, I noticed one thing about gold. First 10 days until 14th in the end of the month, it will fall. Well, that depends on the trend. I don't think the market would recover from that. Yeah, that's gonna be crazy. That's gonna be crazy, by the way. That's gonna be crazy. Half of Fed policymakers sees liftoff of Fed's funds rate from 0 in 2022 versus 7, so it goes up to 9, which is what I expected. More people would now expect increase in interest rates. The median view of Fed funds rates in the end of 2023 is 1%, previously 0.6. 1.8% in end of 2024. So still have some time until it goes absolutely crazy here. Fed sees PC inflation at 4.2 in 2021, previously 3.4, so that's an increase. In there, see jobless rate at 4.8 in 2021, and then I will just put that people up there so I don't miss it. Okay. Did they take off their music? Apparently they took off their music. Here we are. Just waiting the last few seconds on them. Seconds there. And then I need to make sure that you guys don't get your ears screamed at. But here we are. Go on, mate. It's 30 past now. Go on, mate. We can do it, mate. Yeah, alright. That depends on gold falling the first 10 days. That's just because of this just now. It rises normally as well in the first 10 days. So yeah.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, the Federal Open Market Committee kept interest rates near zero and maintained our current pace of asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to support the economy until the recovery is complete. Progress on vaccinations and unprecedented fiscal policy actions are also providing strong support to the recovery. Indicators of economic activity and employment have continued to strengthen. Real GDP rose at a robust 6.4% pace in the first half of the year, and growth is widely expected to continue at a strong pace in the second half. The sectors most adversely affected by the pandemic have improved in recent months, but the rise in COVID-19 cases has slowed their recovery. Household spending rose at an especially rapid pace over the first half of the year, but flattened out in July and August as spending softened in COVID-sensitive sectors, such as travel and restaurants. Additionally, in some industries, near-term supply constraints are restraining activity. These constraints are particularly acute in the motor vehicle industry, where the worldwide shortage of semiconductors has sharply curtailed production. Partly reflecting the effects of the virus and supply constraints, forecasts from FOMC participants for economic growth this year have been revised somewhat lower since our June summary of economic projections, but participants still foresee rapid growth. As with overall economic activity, conditions in the labor market have continued to improve. Demand for labor is very strong, and job gains averaged 750,000 per month over the past 3 months. In August, however, job gains slowed markedly, with the slowdown concentrated in sectors most sensitive to the pandemic, including leisure and hospitality. The unemployment rate was 5.2% in August, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the past year. Factors related to the pandemic, such as caregiving needs and ongoing fears of the virus, appear to be weighing on employment growth. These factors should diminish with progress on containing the virus, leading to more rapid gains in employment. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate standing at 4.8% at the end of this year and 3.5% in 2023 and 24. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. Inflation is elevated and will likely remain so in coming months before moderating. As the economy continues to reopen and spending rebounds, we are seeing upward pressure on prices, particularly because supply bottlenecks in some sectors have limited how quickly production can respond in the near term. These bottleneck effects have been larger and longer lasting than anticipated, leading to upward revisions to participants' inflation projections for this year. While these supply effects are prominent for now, they will abate, and as they do, inflation is expected to drop back toward our longer run goal. The median inflation projection from FOMC participants falls from 4.2% this year to 2.2% next year. The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, bottlenecks, hiring difficulties, and other constraints could again prove to be greater and longer lasting than anticipated, posing upside risks to inflation. Our framework for monetary policy emphasizes the importance of having well-anchored inflation expectations, both to foster price stability and to enhance our ability to promote our broad-based and inclusive maximum employment goal. Indicators of longer-term inflation expectations appear broadly consistent with our longer-run inflation goal of 2%. If sustained higher inflation were to become a serious concern, we would certainly respond and use our tools to assure that inflation runs at levels that are consistent with our goal. The path of the economy continues to depend on the course of the virus, and risks to the economic outlook remain. The Delta variant has led to significant increases in COVID-19 cases, resulting in significant hardship and loss, and slowing the economic recovery. Continued progress on vaccinations would help contain the virus and support a return to more normal economic conditions. The Fed's policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. Our asset purchases have been a critical tool. They helped preserve financial stability and market functioning early in the pandemic, and since then have helped foster accommodative financial conditions to support the economy. At our meeting that concluded earlier today, the committee continued to discuss the progress made toward our goals since the committee adopted its asset purchase guidance last December. Since then, the economy has made progress toward these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. We also discussed the appropriate pace of tapering asset purchases once economic conditions satisfy the criterion laid out in the committee's guidance. While no decisions were made, participants generally view that, so long as the recovery remains on track, a gradual tapering process that concludes around the middle of next year is likely to be appropriate. Even after our balance sheet stops expanding, our elevated holdings of longer-term securities will continue to support accommodative financial conditions. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. Half of FOMC participants forecast that these favorable economic conditions will be fulfilled by the end of next year. As a result, the median projection for the appropriate level of the federal funds rate lies slightly above the effective lower bound in 2022. Participants generally expect a gradual pace of policy firming that would leave the level of the federal funds rate below estimates of its longer run level through 2024. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. More important than any forecast is the fact that policy will remain accommodative until we have achieved our maximum employment and price stability goals. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you, and I look forward to your questions.
Thank you. We'll go first to Rachel Siegel.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. When it comes to the taper and eventually to any rate increases, I'm wondering if you can walk us through what substantial further progress looks like given the latest batch of projections that have PCE inflation coming in a little higher than the June projection, the unemployment rate also being higher than June, as well as the change to GDP lower than June. If you could help us make sense of all those things as you sort through what substantial further progress looks like, that would be great.
Sure. So the test for beginning our taper is that we've achieved substantial further progress toward our goals of inflation and maximum employment. And for inflation, we appear to have achieved more than significant progress, substantial further progress. So that part of the test is achieved in my view and in the view of many others. So the question is really on the maximum employment test. So if you look at a good number of indicators, you will see that since last December when we articulated the test and the readings today, in many cases more than half of the distance, for example, between the unemployment rate in December of 2020 and typical estimates of the natural rate, 50 or 60% of that road has been traveled. So that could be substantial further progress. Many on the committee feel that the substantial further progress test for employment has been met. Others feel that it's close. They want to see a little more progress. There's a range of perspectives. I guess my own view would be that the substantial further progress test for employment is all but met. And so once we've met those two tests, once the committee decides that they've met, and that could come as soon as the next meeting, that's the purpose of that language, is to put notice out that could come as soon as the next meeting. The committee will consider that test, and we'll also look at the broader environment at that time and make a decision whether to taper.
Thank you. We'll go to Howard Schneider.
Thanks, Chair Powell. Thanks, Michelle. So looking at the steps, we got now basically 4 years of inflation above target, and policy never gets to the long run rate. I'm wondering if you could address that from two perspectives. One, within the new framework that the Fed adopted last year. And second, from the perspective of the average household that's now being asked to pay higher prices and increasingly higher prices for 4 years running, when for some this year, real wages have actually gone down.
Sure. So as you can see, the inflation forecasts have moved up a bit in the out years. And that's really, I think, a reflection of, and they've moved up significantly for this year. And that's, I think, a reflection of the fact that the bottlenecks and shortages that we're seeing in the economy have really not begun to abate in a meaningful way yet. So those seem to be going to be with us at least for a few more months and perhaps into next year. So that suggests that inflation is going to be higher this year, and a number, I guess the inflation rates for next year and 2023 were also marked up, but just by a couple of tenths. Those are very modest overshoots. You're looking at 2.2 and 2.1, 2 years and 3 years out. These are very, very. I don't think that households are going to notice a couple of tenths of an overshoot. That just happens to be people's forecasts. We want to foster a strong labor market, and we want to foster inflation averaging 2% over time. And I think we're very much on track to achieve those things. In terms of the framework, I see this as very consistent with the framework. We want inflation expectations to be anchored at around 2%. That's really the ultimate test of whether we're getting this done under the framework. And we do want inflation to run moderately above 2%. I wouldn't put too much on a couple of tenths over 2% in 2023 and 24, one tenth in 24. But you're right; those are the numbers.
Thank you. Let's go to Colby Smith.
Chair Powell, thank you, Michelle. Chair Powell, you mentioned ongoing discussions about the tapering timeline, and I'm wondering what the contours of that debate have been. For those that want to move a bit more quickly, is it about maintaining optionality for a 2022 interest rate increase, or is it about financial stability risks or concerns about the efficacy of asset purchases at a time when we have supply constraints? Thank you.
So let me say that there's very broad support on the committee for this plan, both as to the timing and as to the pace of the taper. So this was a unanimous vote today, and I'd say quite broad support for this approach. You're correct that there are some who would prefer to have gone sooner, and they've made their arguments publicly. For some of them, it's a financial stability concern, and for others, it's other concerns. They can make their own arguments. This is an approach that the committee will broadly support, and it will put us, having completed our taper sometime around the middle of next year, which seems appropriate. The asset purchases, as I mentioned, were very, very important in the early stages of the crisis. They were essential in restoring market function in the Treasury and other markets. Then, as the recovery got going, they supported aggregate demand, as they will do. And now we're in a situation where they still have a use, but it's time for us to begin to taper them. Their usefulness is much less as a tool than it was at the very beginning. And of course, this leaves the whole question of rate increases ahead, which is really where the framework is all about, how we deal with rate increases and that sort of thing. So we think this is the appropriate way to go, and again, broad support on the committee.
Thank you. We'll go to Nick Timrose.
Hi, Nick Timrose of the Wall Street Journal. Chair Powell, you have said the test for liftoff is more stringent than the test for tapering. But if the near-term projections today are credible, more of your colleagues seem to think that rate liftoff and not just a taper may be closer at hand. Does the committee have a different opinion than you do about the threshold for liftoff that you've articulated, or do they believe that either inflation or economic growth will necessitate a rate increase sooner than you do?
Well, so again, substantial further progress toward our goals is the test for beginning the taper. And the taper takes some months in everyone's figuring. So you're going to be well away from satisfying the liftoff test when we begin the taper. So in terms of the liftoff test, though, it's what we adopted last September. It's labor market conditions consistent with maximum employment. And while we have interesting signs that in many ways the labor market's very tight, we also have lots of slack in the labor market, and we think that those imbalances will sort themselves out. Inflation at 2% and on track to achieve moderately higher inflation over 2%, that really depends on the path of inflation. If inflation remains higher during the course of 2022, then we may already have met that test by the time we reach liftoff. So I just think if you look at what people are writing down for year-end 2022 numbers, some people are writing down very low unemployment rates, and that's only one indicator, but it suggests a very strong labor market. And I think they're writing down in good faith what they see as meeting the test. There's a range of perspectives about where the economy will be, but by the way, all but one participants have us lifting off during 2023. So it's not really an unusually wide array of views about this.
Thank you.
We'll go to Gina Smialek.
Hey, Chair Powell, thank you for taking our questions. Prior to recent media reports, were you aware of the kind of security buying and selling that Presidents Kaplan and Rosengren were participating in last year? And I wonder if you thought those were appropriate.
So, no, I was not aware of the specifics of what they were doing. So let me just say a couple things about this subject. We understand very well that the trust of the American people is essential for us to effectively carry out our mission. And that's why I directed the Fed to begin a comprehensive review of the ethics rules around permissible financial holdings and activity by Fed officials. So those rules are in many respects the same as those for government agencies, plus a number of things that apply specifically to us because of our business. One of those is sort of three things I would point to in terms of specific restrictions. One is ownership of certain assets is not allowed, and that's bank securities and other things. Secondly, there are times when we're not allowed to trade at all or to buy and sell financial assets, and that's the period immediately before and during an FOMC meeting. And third, there's regular disclosure. So all of these, everyone's ownership and activities are all disclosed on an annual basis. So I would have had to go back and read people's financial disclosures to know what their activities have been. This has been our framework for a long time, and I guess you'd say it's served us well. The other thing you would say that it is now clearly seen as not adequate to the task of really sustaining the public's trust in us. We need to make changes, and we're going to do that as a consequence of this. This will be a thoroughgoing and comprehensive review. We're going to gather all the facts and look at ways to further tighten our rules and standards.
Great, thank you. We'll go to Steve Liesman.
Thank you. Thank you, Mr. Chairman. I want to follow up on Gene's question. The issue of ownership of these stocks and trades, do you think it's appropriate for Federal Reserve officials to be owning the same assets that the Federal Reserve is buying? Is that one of the modifications that you're looking at? And in that, you said yourself they don't clearly not seen as appropriate. In that, the Fed's code of conduct says Fed officials should avoid even the appearance of conflict. Do those trades, in fact, and holdings violate the Fed's code of conduct? Finally, do you have a timeline as to when you might be done with your review? Thank you, sir.
Don't have a timeline yet. We can start with that. Well, let me address the muni question, since that's in there. I personally owned municipal securities for many years, and in 2019 I froze that, meaning I'm holding all those securities, my wife and I, to maturity, and munis were always thought to be a pretty safe place for a Fed person to invest, because as you know, the lore was that the Fed would never buy municipal securities, so it was not an uncommon thing. And so then comes the COVID crisis, and I reversed that policy, and I did it without hesitating. And the reason was that the financial markets, and including the municipal financial market, were very much on the verge of collapse, and it was time to go, and we did. But we also checked with the Office of Government Ethics, who looked carefully at it and said that I didn't have a conflict. So that's one answer that I wanted to share with you. Secondly, you're right, though. We're going to be looking at all of those things. I don't want to get ahead of the process here and speculate about particular outcomes. But this, again, comprehensive and deliberate process. We're going to make changes. I want to be able to look back on this years from now and know that we rose to meet this challenge and handled the situation well, and that what we did made a lot of sense and protected the public's interest and the institution that we're all a part of.
I'm sorry, Chair Powell, I just want to follow up. You said I was right when you said right about that the Federal Reserve Fed should not own the same assets they're buying. Is that what
I think that's a reasonable thing. Yeah, and of course, for the most part, we don't. I mean, it was a real coincidence. I happened to pre-own these munis. They were bought many years ago, actually, and so we started buying munis as part of the municipal liquidity facility. So it was really it just was an unforeseen event, and I couldn't sell them. So what I did was I just held them, checked with the ethics people, and went ahead. So, but as a general principle, yeah, that makes a lot of sense.
Thank you.
Thank you. We'll go to Chris Rugaber.
Thank you. Thank you, Chair Powell.
So, people, after a long talk there, let me find some charts so we can go over dollar. So, what really is the English terms to use? I am going to do that now. I'm just going to make sure that you all can hear me. Great. Fantastic. Great. So, good. So, yeah. By the way, 100 people. I have not been above 100 people on a live before. I just want to say thank you very much. Namaste, sir. I don't know. Danke. It's probably German and Spanish. I don't know what that is. I just know como estás. So, here we are. So, let's finish. So, first of all, we actually now have a pinpoint. First of all, the first points in the points is we now have a timeline. They gave us a timeline. They gave us mid 2022, which is it 9 months from now? 9 months from now, they are going to start tapering. Of course, that's just a protection if the market is where it's supposed, or where the economy is supposed to where it's supposed to be. Point number 2, we still don't have, as we knew, we still don't have full economic employment. That's number 2. 3, we are exceeded the inflation target at the moment. We are a bit above it, or ish, as far as I saw it. Number 4, they raised there's more Fed governors now from 7 to 9. They think that we're going to increase interest rates in 2022. That's number 4. Number 5, that was that they increased the growth forecast both for inflation and then for producer inflation. Producer inflation was from 3.4 to 4 point whatever that was, 3. They also increased normal inflation. That's just a kind of like an update, more to say. We already know that kind of thing. And then I didn't see anything about GDP. What else? And then they said that longer-term inflation expectations are consistent with their target. So it's on track, kind of a thing, with inflation at the moment. There are risks to the economic outlook. They might not be where they want to be. They might not be where they want to, where things can still go south. That's what I'm saying. In terms of COVID. Bottlenecks that are still there in the market might still be there. That there's not enough drivers to bring out the Coke bottles and Pepsi bottles and timbers and steel and whatever they are trucking around in America to the right time so that businesses can sell. That's what they need to do. They need goods to sell to customer. Customer needs to pay. And if it's nothing to buy, then there's nothing to sell, then there's no income, kind of a thing. And then the economy goes down again. If you have enough of that, generally speaking. All right? So, a lot can happen in 6 months. But that's just the view today. This is what we know today. And if somebody I said earlier, dollar's going to rise today. Boom. Thank you very much. Thank you for everyone saying that. Thank you for saying congratulations for me for having an opinion. And my opinion was right. There we go. You were a gone investor. Just making a couple of millions here. Okay, cool. You're in a buy cipher. Okay, literally inside trading. Powell, yeah, they just, by the way, that was a 10th thing they mentioned. He just admitted to be insider trading. But hey, who doesn't do that? There is TikToks on the TikTok accounts that is following whatever the CEOs and Nancy Pelosi and whatever those people are called in the Congress, whatever they're doing. All right. So, delayed tapering to mid of next year should weaken the dollar, but yeah, it should in the end. York, welcome, Danny. 166 likes. Yeah. Congrats, 100. Middle of next year. Who is going to say the tapering starts then? The thing is, we actually now have we have specific, time frame as to what is going to happen in the future. So, or what the Fed think is going to happen for the future today. But remember, if we have strong employment numbers coming out on NFP, things is going to change. All right? Come on, guys. 1 second click on the like and 1 second click on your time. Is that too much? Apparently. Manuel list is the best. Clicked. Good. Lam, good night, by the way. Please, good night. For those who are in Malaysia, I know it's early or late, depending on how you see it. Yeah. Yeah, that makes it go back again. Kumar. Okay, so trading wise, what's happening trading wise? I said sell at 17. I had a sell at 17.50. That got triggered, but it's not there anymore. Euro, I said 73. That did not get triggered. This is just in the middle of the range. Euro USD is currently making a lower low. Pound dollar is making a lower low. Pound yen is making something in between. New Zealand is just in between. USD CAD is somewhere in between. And that was the buy price you got, by the way, that I mentioned on Sunday. So what is going to happen right now is we are probably going to have some dollar bullishes now. And the dollar bearishness, in my opinion, is going to come in the end. All right. So what else is there for me to do now? It is currently been here for 1 hour and 14 minutes. All right. And then Powell is probably still speaking, I guess. But just see if he says something more. But the thing is is, what is your trading? Is your fundamental bias changed? Does this change the world? No, it doesn't. It makes it a bit, what do you call it, clearer, I would say. Investor needs to go to sleep for London? Come on, bro, it's not that late. Go on, mate. Yeah. Nah, you're a dollar bull. Yeah, okay. Have fun then, but you didn't get your entry, by the way, bro. You were too high. So, okay. As far as I understand, everyone right now, we are off to the races. One last check on the markets. Gold at the moment is coming back down to support. Still bearish, by the way, people. Still bearish, still bearish, still bearish. So, I guess same thing tomorrow. I actually want to take a nap now. I feel the same too. So I've been here enough, guys. So if you guys want to come to my channel, Discord is up there. Join the free Discord. There's a Discord up there link. That's the only thing I'm gonna sell because it's free. The next thing I'm gonna mention is I'm a mentor. So if you want to do that, great, fantastic. Then you can learn a lot from me if you want to. And then after that, I will say goodbye, good night, have a good day. I will be live tomorrow probably. Have a good day, boom. And yeah, fantastic. Okay. Yeah, so I think it's gonna go south. Yeah, probably. Yeah. Okay. Have a good day.